Good morning, good evening, and welcome to the Forex BattleGround, where we go ahead and take a look at the market setups. We look at trade opportunities that are presenting itself this week, but more importantly, we take a look and see where the turning points of the market are to determine whether or not we are in an uptrend, downtrend, or just simply sideways. Well, my name is Gary Fickard, known to many as the FxBigDog, and in this session, we're going to dig into the charts, we're going to dig into the details, and figure out what's going on in the market. So I'll see you back in about just a couple of seconds. Well, hey traders, and welcome to the show, and glad to have everyone here. We're going to dig into the details at the moment right now to figure out where the market's at, what the market's doing, and how we can trade it. Now, we have to ask the question, is the dollar moving in a bullish trend, bearish trend, or are we just simply sideways? We did see some upside movement towards the latter part of last week. We saw a big downside move at the start of the week last week, but we did recover somewhat. Now, the question here is this going to be a trend, a new trend that the dollar is moving into, or are we actually, in fact, just hit a bottom and now still continuing in an upward channel? Well, we're going to dig into those details. We're also going to look at U.S. oil. U.S. oil has set up a different setup than what we anticipated, but there's still a level that the market has still not broken through. Well, we're not 100% certain whether we are in an action uptrend or whether the market actually is going to be heading further down south. Remember, we spoke about $61 a barrel that the market is targeting, it should be targeting. And so the price of oil has moved up higher over the last few weeks, and we still haven't seen that downside move towards that $61. $61. Now let's go dig into the charts, go deeper into the analysis, and figure out what's going on. Because look, dollar and U.S. oil is going to affect a lot of crosses across the board. All right, a lot of pairs are going to be affected by both those currencies. I'm talking about US oil affecting Canadian dollar, and of course dollar index affecting what the dollar is going to do as well. So let's go ahead and dig into the details. I'm going to go ahead and share my screen right now, and let's go ahead and take a look and see what is going on. So let's go to the chart, take a look at the chart right here, and good afternoon everyone that's just joined. Robert, good day to you, my friend. Good to see you here. Robert's actually he's here every single show that we do. So Robert, I've seen you quite a few times. Appreciate you being here, my friend. All right, let's go ahead and take a look and see what's going on here and what's going on in the market. So here is the dollar index sitting up right here. And as you can see right here, we have seen that downward move towards this upward channel. Now, if I go ahead and compress the charts a little bit more, or at least span out a little bit, we can see that there is this downward AB swings. We got one swing, two swing, three down here. So we're in a fourth wave swing. Markets turn around here. So in the long term, we expect dollar to continue to fall. All right. So we are expecting dollar to fall back down, right down here to this level, and that is at 11,399. So dollar index is expected to continue to move to the downside. Now, in the short term right here, as we dig deeper into what's going on here in the short term, we got to start paying attention to these details. Now, we did have that rising wedge. Price did break down. Took a little bit of time to do it, all right? Because if you look over here, we did have the market moving sideways. We expected a lot quicker move to the downside after we had formed this pattern. And as I go ahead and pull this up here, we can see now that with this pattern, there was that range-bound trading. We broke out of the range, came back to retest the backside right here that sent the market back down south, send the dollar index back down south to touch this support level right here. Now, the question here is it going to hold, and are we going to see a continuation of the rally, or are we indeed going to break through and get back down to this trend line and see further weakness in the dollar? Well, I believe it's going to be further weakness, and I'll tell you why. So we did look at the bigger picture, and the bigger picture did tell us that the dollar index is setting up, of course, with that wave 1, 2, 3, 4, and now looking for the 5th wave. Let me go back and compress the chart so you can see right here what that looks like. Okay, so if I compress the chart, there it is. So this is wave 1, 2, 3, and this is 4. Now looking for 5 to come down here. Okay, now because we're expecting the market to sell off, so we should start looking at a lower time frame and start getting confirmation that the turning point that we're anticipating is coming up, and where is it? How do we find out? How do we determine the turning point's there? Well, the first thing is we move down to lower time frame, and you can use an upward trend line. And if the market breaks that upward trend line, that's also one sign. That's a very simple way to be able to identify that the trend is changing on the lower time frames. Because remember, traders, in order for a larger trend to change, we have to first start seeing the lower trends change directional bias. And if the trend is reversing on the lower time frames, then eventually we'll get the signals and the signs that the large time frame is confirming it as well. So let's look down at the lower time frame as we dig for the details there. So here is the again the daily. And so before I move down to the daily, to the lower time frames, let's go ahead and take a look and see what we've got here. So take a look right here. So I'm seeing here that we have a wave 1. All right, I'm going to mark it off there, wave 1. Then price moved up, giving us a wave 2. Then we had the market drop all the way down to my 1.618 right here, which means that we now actually in a third wave. But hold on a second. I'm not going to stop just there. Because if I look inside here, there are inside swings. And let me go ahead and mark them off. Look at this. Inside from there to about here. There it is, yep. And then it created an irregular flat. Look at that. It goes up, down, then goes back up with a high pullback. So this is an inside wave 3. So if that's an inside wave 3, what does this mean? Well, it means this. All right? It means that we have a large wave 1, large wave 2. There it is. I'm going to go ahead and mark it off like this. Then we have an inside wave 1 down here. I'm going to mark it off as 1. Then we had an irregular flat, giving us a wave 2. All right. And then we had a drop right here, giving us wave 3. Again, inside. And now this is a 4th wave right here, which means that we still need to see the dollar fall another time right here, drop back to this level right here, complete it, make a 5-wave structure here, and then guess what? This is going to be my large 3. And if that's the case, then we'll see a correction move. This will be my large wave 4. And then we'll see another 5-wave move down south, and this will be my large wave 5. So you can see how, if you look at that structure right here, you can see how we can anticipate the dollar to continue to fall, but it's going to be in this wave structure. So there might be days and weeks that we might see a correction move, a bullish correction move, but it's only going to be short term for that particular week as we continue to see the dollar fall and head back down further down south. Now, again, the Feds have spoken about raising the rates 3 times this year. But there has been rumors that there might be a 4th time that they're going to have to raise rates. And if they don't do something that's going to be effective, that's going to control inflation, then clearly the market's not going to be happy with that, and we're going to start seeing some further downside move. Now, again, is not just only are we going to start seeing the Feds raise rates, but is there going to be a stop and a hold in spending? Because spending is obviously is weakening the currency, but also, of course, pushing up inflation as well. So there's a lot of that needs to be controlled. There's a lot of things on the agenda for the Feds in order to be able to control inflation, but at the same time make decisions on how quickly and when to start raising rates. And it's coming. It's definitely coming. So this is the pattern that we're seeing right here. If you want to go ahead and take a quick look at that, that's the pattern that we're looking for the dollar to start moving in. So that's the reason why we believe that this rally that we're seeing currently right now is not a rally in the long term, but more of a short-term rally as a correction rally. And then we're going to go ahead and start seeing a further sell-off. And then we may go ahead and see the market come back up again. As you can see right here, it can come all the way back up and retest the backside of a trendline break and then sell off back down south. So the market's going to move gradually back and forth, bullish, bearish, but we're going to be able to trade that. So if we're looking for an outlook for this week we can see that we're certainly in a correction move. and the market's going to do something like this. The market's going to correct itself as it's doing, then it's going to find a bit of resistance. Now we could hold off here, all right? We could hold off at that high right, that low right there, and just move a little sideways, and then eventually gradually break down as we move to Friday. Well, sometimes we need news to help push the market. I believe technical analysis leads the market over fundamentals, but there's no doubt in my mind that fundamentals help support the pushes towards these targets that we're chasing after. Whether the market's in an impulsive move or even in a corrective move, we need to see the news to help push it in that direction, especially if we're looking for quick moves. Now, if that's the case, then let's take a look at the news report this week. What is coming out this week that could be super, super important? Well, if we take a look right here, we do have a Wednesday. Quite a data coming out of Wednesday. It's not really moving the dollar. We've got Canadian data, we've got pound, or at least UK data coming out. We've got Aussie data coming out. That's important right here. And then as we go to the end of the week, you'll see that we're starting to see a bit of crude oil. We're starting to see a bit of US data as well towards the end of the week. So not so much at the moment right now in the first part of the week, but in the second part of the week, we're starting to see some data. So the latter part of the week, we're starting to see some data, which means that if that's the case, then this could be a natural move of the market just stalling here for a bit, and then start selling off towards the end of the week. So maybe this is going to be a slow moving up, bullish move on the dollar for this week as we're heading into the Friday or Thursday, Friday, and then, of course, start seeing a change in direction. Maybe we'll have it on Thursday, that U-turn, because the markets love Thursdays. Thursday's a good time for the market to reverse any sort of trend that has been in for that week. So Thursday might just be that day, all right? Now, that's the dollar. Let's take a look at U.S. oil. This is what's interesting about U.S. oil right here that I truly believe that traders need to pay attention to. And that is that we drew in, okay, let me go ahead and compress chart. We drew in these swings going from the bottom. This is wave 1, 2, 3. And we said that we could see price moving up towards around about $88. Now, if price is going to move up to $88, we need to break through the highs that is currently trading at the moment right now. Let's take a look and see what that is. All right, there it is there. So we're right at the side. Now, we could also get double tops. It's not confirmed yet, because the only time that the double top is confirmed is when it breaks through the confirmation point. And the confirmation point is right down here. Look at that, at $62. So which means that $61 that we've been speaking about for a long time may come into effect if we are going to see oil prices moving sideways. All right. Now, are we going to see oil prices continue rallying? Yes. But I believe that we're first going to see the market take out 61 before it gets to any higher highs above $88 a barrel. Let me go ahead and explain what I mean there. So because I've got a fifth wave up here that's targeting 88, it means that I could be short-term wrong. Short-term wrong means that the market doesn't hold here at these highs. It actually goes through it, but gets to 88. When we get to $88 a barrel, then I'm expecting the price to drop. So $61 right here is always going to be a factor. Write that down so that a month or 2 months or whatever down the line, if that number hits, FxBigDog mentioned $61 is a factor. So $61 a barrel. So $61 is a factor. Whether we are moving south from where it's at right now, or where we come to this level before it hits 88, or if we come to this level after it hits 88. So 88 is a factor, and 61 is a factor. Market's going to get to those levels. Now, how do we define how to trade this? Well, U.S. oil is going to be affecting the move of the Canadian dollar. And so as we go to a setup, let's go to a setup that involves let's go to pound CAD, that involves the Canadian dollar right here. So here is the pound CAD. Now every pair that you look at, obviously there is a quoted currency, and then you have the you've got the base currency. So you have the base currency, the quota currency. The second currency is always the quota currency, and the base is, of course, the first currency. So if we look over here, we have the pound base, and we have the quoted pair, quoted currency is the Canadian dollar. And if we look at this setup here on the daily, we notice that we are range bound. We've got bottoms right here, we've got tops right here, and we've just recently come off the bottom. So we're expecting pound Canadian actually to continue. If it's going to stay in this range, which looks like it is, we should see it continue to rally up here to the top. So in the meantime, we're going to start seeing the price finding a little temporary resistance and bouncing down, and then support, and then rallying back up again. So if you look over here, we had this nice little rally going up here. We got the backside of this trend line acting as a resistance level. Price rejected that level and starting to push back down. Now the question here is, how much further is going to go? Well, we don't believe that this is going to go too far, okay, before turning around and head back up north. And if it does go south a little bit and then go north, then that means that the Canadian dollar is actually strengthening value as price moves down on the pound CAD, but then it's going to weaken value as price goes back up again. So again, I believe that there's a lot depending on what happens with US oil. If we do see a drop back down here, that means oil's getting stronger. That means we're chasing after that $88 a barrel. All right. If we do see it hold here at the support right here and start turning back up north, there's a very good chance that US oil is going to stall at that the tops, create these double tops, and then head back down to that $61 a barrel. That means that oil is going to get weaker, and if that does happen, then the pound CAD should rally. Now that lines up perfectly with my analysis on oil, and it works out perfectly based on what I'm seeing here on pound CAD. So there's a good correlation between the two, which means that I can go ahead and trade this with confidence, knowing that I am eventually going to see US oil weaken. That's going to allow me to be able to trade the pound CAD bullish. Now, I can make a decision to do some short-term trading on the pound CAD going south, just short-term, never be married to that trade, with the intention that I'm going to turn around, head back up north again, and start buying long because of the fact that I've gone ahead and did my analysis. Now, how would I trade it? Well, there's different ways to trade the market, but one effective way is when you're expecting the long-term trend or mid-term trend to be bullish, the best way to go ahead and trade that is to go ahead and use a cost averaging. Go ahead and get in on signals that I'll go ahead and confirm. Now, there could be a system that you're trading that could give you multiple buy signals, and you could use that system to be able to say, every time I get a signal, I'm going to put a little bit in. All right. When I say a little bit, that means you're not fully committed to that trade. You're just committing small bits and pieces to it to eventually a point when the market does turn around, you've built up a nice portfolio, all right, of trades. So this would be on the pound CAD. Now, as we continue to monitor, all right, we want to take a look and see what's going on with gold. Let's take a look at gold right here. Gold, we've spoken about gold, and we said that gold is looking to continue his rally. In fact, we spoke about this on Friday. I had a session on Friday, and we said that gold has gone ahead and created this rally. We're still looking for gold to go up to around about 1852. Now, when gold gets to 1852, we're then going to see another dip, another rally, and so we're expecting gold to finish off here at around about, let me just double check here, at around about, there it is, all the way up here at about 1938. We spoke about buyers here. We said buying at 1786. That was actually a week ago. So Friday, a week ago, we spoke about 1886 to start buying at 1886. Price is trading now at 1786, and price is trading now at 1818. Now we're not going to stop there, but we are going to anticipate price on gold to go ahead and rally to this level right here, then dip again, giving some new buying opportunities as we start moving closer and closer to this 1940 level right about here. So gold is definitely on I would say a slow rally, not a very aggressive rally, but a very slow rally at the moment right now. Now that brings my attention to cryptos. And I'm going to go ahead and say this. My eye is on Bitcoin right now. I'm keeping a very close eye on what Bitcoin does here at this 40,000 level. All right, I want to see it stay as a trade above 40,000. Number one. Number two, I want to see it start breaking through this downward channel line right here. You see this downward channel line right there? I do want to see price trading back above that. And then if we can take out $52 right here, 52,000 right here, then we're going to be super bullish on Bitcoin. Now, Bitcoin is not only am I investing in Bitcoin, but of course altcoins as well. But Bitcoin is the godfather of all coins, and therefore, if we can see Bitcoin starting to make its move, the altcoins will follow suit. So I'm not getting heavily invested into any altcoins at the moment right now, although they're cheap, because of this one reason. If we do break 40,000 on Bitcoin, then my projection on a downside move is all the way down here at 30,000. I'm going to be irresistibly bullish at 30,000 on Bitcoin and altcoins when we get down to 30,000. Any altcoin that shows a very low value in price, I will certainly want to get in on those, especially the top 50 on the market cap. I will certainly want to go ahead and look which ones are best to go ahead and jump in. They can give me the highest bit of return. Because if Bitcoin gets to 30,000, then this will be a strong support level that we're anticipating price to move back up again. So again, 40,000 right now. I'm not looking to add on any positions at the moment right now until I see what it does at 40,000. If it breaks 40,000, gets down to 30,000, I'm irresistibly bullish at 30,000. If it breaks the trend line, I'm going to continue to hold my position that I currently have, and I'm going to wait until we see 52,000 broken. When 52,000 is broken, any dips on any altcoins, I'm going to be looking to get in on those altcoins because we are definitely strong bullish on Bitcoin. Okay, that's going to be on Bitcoin, and then let's go take a look at. I want to go ahead and take a look at. Let's see here. I believe it was Euro Swiss. We had Euro Swiss. We were talking about Euro Swiss. I want to go ahead and just do a quick recap on Euro Swiss right here. We spoke about Euro Swiss rallying. All right. When it was down here, I told you that I was long Euro Swiss. I'm still long Euro Swiss. And I said when price came up to here to hit this old, you can see old support, now become resistance. I said we're going to get a pullback. And we did. Look at the pullback right here. And I said when the market comes back and pulls back, we're now going to look for a fourth wave to trade the fourth wave. Let me go down to a 1 hour time frame and show you what it looks like here. There we go. See the 1 hour? Notice that we have this level right here that has become, let me see if I can get, let's see here, where is it? There we go. We have this level right here. This is the 1.618 of the previous swing. That level there, if we stay above that, we are going to be bullish. And so far, this pullback has managed to go ahead and actually take a look right here. We've got a nice little wedge here. All right. This is a falling wedge right here. We got a nice little falling wedge right here. That means that when we break through this wedge, price is going to target this level, but that's just going to continue to drive the Euro Swiss bullish towards this target right here. This is what I'm looking for right here. I'm looking for price to move to 1.0599. Let's call it 1.0600. All right, so that's the upside target right here. So as we are sitting right now in this falling wedge, any sort of breakout of this should be a great opportunity for traders to go ahead and get back in on the Euro Swiss right here as we're looking for price to go ahead and move back up to that level there. So looking at this closely, still long on it, and I'm chasing after that 1.0600 level here on the Euro Swiss. So looking pretty good. And we did speak about Euro Swiss. We spoke about the possibilities of a soft intervention with the Swiss National Bank. We haven't really seen it across the board. Nothing's really happened. But the Swiss National Bank is not only looking at the Euro Swiss, but of course all Swiss crosses. They are concerned about all Swiss crosses. They do not want the currency pair to get strong. But doesn't every country, right? Doesn't every country want a weaker currency to help stimulate the economy? Well, I guess so. COVID's not really helping that either, is it? But in any case, we have a situation here where we have a good buying opportunity. So there's a great buying opportunity right here. Now, finally, if I go ahead and take a look at what trade is the best trade of the week, well, if I look at the way the currency strength meter is working at the moment right now, we do have in real time the weekly setup right here telling us that we are getting strong CAD, weak JPY. So let's take a look at the CAD JPY cross and see if it does line up with our technical analysis. We're going to go to the daily time frame right here, take a look. All right, so once again, let's go ahead and recap here. We're seeing strong CAD, weak JPY. Now, if it's strong CAD, weak JPY, then we should see rally, right? And we should be looking to buy on this pair. Now, let's go take a look and see here. One thing you have to be very cautious about is this. See here, we're at resistance. Now, despite the fact that we're seeing possibilities of CAD JPY continuing its rally, we have to be certain that that resistance that we're seeing here on this particular chart is going to go ahead and break. Are we going to break that? And be very careful. Now, I would be a trader that says buy support, sell resistance. When you're at resistance, stand aside, okay, and make sure that we're breaking through the resistance, or sell resistance with a cost averaging trading approach. So if we do break that, you can cost average in, get out of the trade on the pullback, and then go ahead and start buying long. All right, did you get that? Let me go ahead and say that again. If we are going to trade resistance here, okay, trade it with a cost average, which means that if you go ahead and sell here and price breaks through that resistance, you're going to cost average in on this. So when it turns around to come back to retest and continue its rally, you can make money on this trade, get out, and swing it back up north with the same strategy, with a cost averaging. Why? Because the reason why you want to cost average is because if the market does not bounce off that support and continue to move down, you can cost average in. When it goes back to retest that resistance, you get out, make profit, reverse the trade, and start selling. That's how traders can get in and out of trades and not lose money when the market's at the support and resistance levels that we're not 100% certain that the market's going to actually take off at those levels. Use cost averaging trading approaches. Too many traders get in at these levels and actually get beat up when the market's trying to figure out whether that resistance is going to set a bullish tone or bearish tone. You got to use a different strategy, be able to play the market, because this is a battle between bulls and bears, but at the same time, we don't want to be caught up in between. Think about it. Do you want to be caught up in between a bull and a bear fight? No chance. And that could happen. So make sure you got a good strategy, a good plan of action when it comes to these type of setups right here. All right. So that's the outlook for the week. Certainly going to go ahead and take a look at the news out this week, but we've taken a look at the dollar, we've taken a look at the oil, we've taken a look at a couple of crosses. We're certainly going to continue to monitor these setups as we go through the week. Traders, good luck with your trading. Have a fantastic week of trading. Check out Bitcoin, see if we can break through those trend lines and get super bullish above 52,000. If it doesn't, it gets to 30,000. We are going to be irresistibly bullish at 30,000. This is FxBigDog signing off.